Assalamualaikum and very good evening to Madam Fatin. My name is Nasiha Sarah binti Saidmunaf and my ID number is 243UG245KC and I am from Group 18. Today I'll be presenting about KLCC Property Holdings Berhad. KLCC Property Holdings Berhad, KLCCP, is at the forefront of Malaysia's investment property companies, having made tremendous contributions to the development of Kuala Lumpur's skyline and urban planning and architecture. KLCCP is the investment property division of Malaysia's premier oil and gas company Petronas and was founded on February 7, 2004. Petronas made a historic move in 2004 when it took a public listing and sold 46% of its holdings in KLCCP. This is one of the largest IPOs in Malaysia. In 2013, KLCCP changed its corporate structure by establishing the KLCC Real Estate Investment Trust (REIT), which gained control of primary assets such as the Petronas Twin Towers. This new structure created a KLCCP staplet group where shares were issued in conjunction with the staplet units of the KLCC REIT. Next, moving on, is type of products and services offered. KLCCP has a brand range of investments that covers office, retails, and hospitality assets. And it also provides management services. Office assets under Petronas include the Petronas Twin KL Tower, Petronas Tower 3, and Menara Exxon Mobil. In the retail sector, KLCCP owns Surya KLCC, a leading shopping mall in Kuala Lumpur City. The group also holds interests in the Mandarin Oriental Kuala Lumpur, one of its five-star luxurious hotel in the city. Furthermore, KLCCP operates and maintains its properties, which include facilities management and related services to ensure operational excellences. Next is description of products and services. The Petronas Twin Towers, which used to be the tallest buildings globally, contain many foreign companies and continue to be a representation of Malaysia's modernizations. Surya KLCC Shopping Mall has 6 levels and a mix of international and local retail brands, dining and entertainment. The Mandarin Oriental Kuala Lumpur provides luxury accommodation and comprehensive wellness facilities, along with fine international dining to both local and global citizens. Moving on is justification of selection. KLCCP has been selected for analysis as a result of its importance in the property market of Malaysia and because of its association with developments that have become symbols of the nation's development. Its well-planned strategies and strong holdings make it an important player in the property market in Malaysia. Lastly, it's about industry overviews and positioning. Within the business environment of Malaysia's property investment, KLCCP Staple Group is in a leading position as the largest real estate investment trust REIT, with a net asset value of RM12 billion. Being close to Petronas and owning expensive properties in good location gives the company an advantage. Although KLCCP is focused on high-value assets and major brand centers, there is an oversupply on other segment of Malaysian property market, which hinders economic growth. However, market adjustment and industry challenges are essential to consistently be met to maintain growth. That's all from me. I'll pass to the next presenter. Thank you.
Hi. Hello. Good afternoon, Ms. Fatin. My name is Manavd Azim, student ID 118-110-1869. And today I'll be presenting on UAM Sunrise Berhad Part 1, which is Introduction. And so, let's go. UAM Sunrise Berhad. Okay. UAM Sunrise Berhad, one of Malaysia's leading property developers, the company was formed in 2008 through a merger between UAM Land Holdings Berhad and Sunrise Berhad. This merger combined UAM's land expertise in large-scale township development with Sunrise, focused on high-rise residential and commercial projects. UAM Sunrise is a subsidiary of UAM Group Berhad and is listed on the main market of Bursa Malaysia. Let's take a closer look at its background and offerings. Okay, company background and its offerings. UAM Sunrise Berhad has a rich history stemming from its merge in 2008. This strategic merge allows the company to leverage UAM's land's capability in planning and developing expansive townships, while also integrating Sunrise expertise in constructing modern high-rise building. Today, the company is recognized as one of the foremost property developers in Malaysia, blending traditional development township planning with cutting-edge urban development. Slide 3. Type product service offered. UEM Sunrise is involved in a broad range of property development activities. This include primarily township developments, integrated mixed-use project, and high-rise residential and commercial buildings. Additionally, they develop retail properties to cater to modern lifestyle demands. Beyond property development, the company also offers property management service, ensuring that their project maintain their quality and functionality long after completion. Description of product service. One prime example of UM Sunrise work is Solaris Park. Located in Duta Mas, Kuala Lumpur, this development is a modern neighborhood that integrates residential, apartment, office, and retail shop within the same complex. Solaris Park was designed to foster an eco-friendly urban culture by providing a community where people can live, work, and shop without needing to travel far. It's a great illustration of UM Sunrise's commitment to convenience and sustainability. Okay, justification of selection. We selected UM Sunrise as a case study because of its significant role in Malaysia's property development sector. The company's diverse project portfolio, focus on urbanization, and commitment to building sustainable communities have set it apart. Additionally, UM Sunrise has earned a reputation for delivering high-quality development, making it a key player in shaping Malaysia's urban landscape. Industry overview and positioning. Within the Malaysian property development industries, UM Sunrise stands out as a leader with a net worth exceeding 5.03 million ringgit, despite the challenges posed by economic fluctuations and changing property demands. The company has demonstrated resilience by strategically adapting to market conditions. By maintaining a diverse portfolio, UM Sunrise continues to shape urban areas and sustain its competitive advantage in a challenging business environment. Closing summary, key takeaways. In conclusion, UM Sunrise Berhad is a trusted and influential name in Malaysia's real estate sector. Through its innovative project, strong foundation, and ability to adapt to market changes, the company has positioned itself for continued success. Its commitment to creating sustainable and convenient urban communities reflect its vision for the future. Yep. Yep. So thank you. And that's all from me. I'll pass on to the next person. Have a good day.
Okay, so Assalamualaikum. My name is Adib and I will be presenting part two for our assignment. So I will be starting with liquidity ratios for KLCC. Okay, so the first one, we got current ratio. We use current assets divided with current liability for the formula. And inserting all the numbers, we will get 4.5 for 2021, 3.77 for 2022, and 0.95 for 2023. The next one, quick ratio. We use current assets minus inventory, and then we will divide with the current liability. And we will get 4.05 for 2021, 3.76 for 2022, and 0.95 for 2023. And the last one, for the cash ratio, we use cash divide with current liabilities, and we will get 3.62, followed by 3.42 for 2022 and 0.88 for 2023. The next one is activity ratios for KLCC. We will start with receivable turnover. We use sales divide with account receivables, and we will get 13.1, 14.3, and 11.2. The next one, inventory turnover. We use COGS, cost of goods sold, divide with inventory. And we will get for 2021, 13.1, for 2022, 231.4, and for 2023, 3,116.5. And the next one is assets turnover. We use sales divide with total assets, and we will get 6.5 for 2021, 8.1 for 2022, and 8.8 for 2023. The next one is debt ratios for KLCC. We use total liabilities divided with total assets for the formula, and we will get the answer for 2021 is 16.53, for 2022, 16.55, and for 2023, 16.57. And the next one, profitability ratios for KLCC. For the profit margin, we got 19.97% for 2021, followed by 2022, 25.73%, and 27.31% for 2023. And for the ROA, which is return of asset, we use net income divide with total assets, and then we multiply it with 100, and we will get 5.56% for 2021, 9.49% for 2022, and 11.02% for 2023. And for the ROE, we use return of equity. We use net income divided with total equity, and then we multiply with 100. And then we will get 3.55%, 6.01% for 2022, and 6.93% for 2023. And the last one is market value ratio for KLCC. Uh, we start with price earnings ratio. PE ratio. We use price per share divide with earnings per share for the formula, and we will get 23.85 for 2021, for 2022, 15.47, and for 2023, 13.75. And then price sales ratio, PS ratio, we use the formula price per share divided with sales per share, and then we will get 10.09, 8.30, and 7.91. And the last one is market to book ratio. We use market value per share divide with book value per share, and we will get 0.91 for 2021, 0.92 for 2022, and 0.96 for 2023. Okay, so I will move on into the our next company, which is UEM Sunrise, and I will start with the liquidity ratios. So the first one is current ratio. The formula will be exactly the same like MCCs, and so we will get 1.41 for 2021, 1.12 for 2022, 1.57 for 2023. The same for quick ratio. The formula we use still the same. For 2021, we got 1.2. 2022, we got 0.71. And for 2023, we got 1.12. And for cash ratio, after we insert all the numbers into the formula, we will get 0.38 for 2021, followed by 0.33 for 2022, and 0.45 for 2023. And then we go into the next part, which is activity ratios for UEM Sunrise. We start with receivable turnover, and after we put in all the numbers, we will get 2.47 times, and then 2.56 times for 2022, and 2.23 times for 2023. And then we got inventory turnover. We got 2.11 times for 2021, 1.11 times for 2022, and 0.85 times for 2023. And then as for the asset turnover, we got 0.09 times for 2021, 0.11 times for 2022, and 0.10 times for 2023. Okay, so for debt ratios for UEM Sunrise, formula is still the same. We will get 0.48 for 2021, 0.47 for 2022, and 0.46 for 2023. The next part, which is the profitability ratios for UEM Sunrise. For the profit margin, UEM got minus 17.91% for 2021. They do better for 2022. They got 5.57%, followed by 6.42% for the 2023. For ROE, they still got minus 2.08% for 2021, but they got better, 0.63% for 2022, and 0.66% for 2023. For ROE, they still got minus 3.13% in 2021, and then 1.20% for 2022, and 1.24% for 2023. The last part for UEM Sunrise, market value ratio. For the PE ratio, UEM got minus 7.62% for 2021, for 2022, 16.25, and then for 2023, 47.93. For the PS ratio, they got 1.57 for 2021, followed by 2022, which is 0.87, and then 3.08 for 2023. And the last one is going to be market to book ratio. Formula is still the same. They got 0.24 for 2021 and 0.19 for 2022 and end up with 0.59 for 2023. And that's all from me. I will pass it to the next person. Thank you.
Good day, madam. I'm Abhita Chandraj, and I'm going to be talking about the financial performance evaluation of two prominent companies, which are KLCC Property Holdings Berhad and UEM Sunrise Berhad, focusing on their liquidity, activity, profitability, and market value ratios over the period of 2021 all the way up to 2023. In this analysis, it will highlight their financial strengths, weaknesses, and key takeaway for investors. Starting with liquidity, KLCC initially demonstrated a strong liquidity ratio with a current ratio of 4.5 in 2021 and 3.77 in 2022. However, this fell drastically to 0.95 in 2023, indicating difficulties in meeting short-term obligation. Quick and cash ratio to a similar downfall trend, suggesting possible challenges in cash and asset management. In contrast, UEM Sunrise exhibited a more stable liquidity performance, starting with a current ratio of 1.41 in 2021, declining slightly in 2022 to 1.12, and then recovering to 1.57 in 2023. Despite the improvement, UEM Sunrise remains cash poor, with consistently low cash ratios, indicating the need for better quality management. Moving on to activity ratios, KLCC outperformed UEM Sunrise significantly. Its receivable turnover ratios at 13.1 in 2021 peaked at 14.3 in 2022 before declining to 11.2 in 2023. This reflects strong cash flow management despite a slight slowdown in collection. UEM Sunrise, however, faced challenges with consistently low receivable turnover rates, where 2.41 in 2021, improving marginally to 2.56 in 2022, but declining once again to 2.23 in 2023. This indicates inefficiency in cash collection. Inventory turnover also revealed a stark contrast, where KLCC displayed extraordinary figures, likely due to bulk sales. UEM Sunrise, on the other hand, declined steadily, signaling struggles in converting inventory into revenues. Next, let's take a look at the profitability ratio. KLCC demonstrated consistent profitability, with its profit margin growing from 19.97% in 2021 to 27.31% in 2023. Similarly, its returns of asset ROA and return on equity ROE improved, reflecting efficient utilization of asset and equity capital. UEM experienced a remarkable turnover, moving from a loss in 2021 with a profit margin of negative 17.91% to a profitability in 2022 and 2023, with margins of 5.57% and 6.42% respectively. However, the ROA and ROE remained low, highlighting room for improvement in leveraging its asset and equity efficiently. Last but not least, we have market value ratios. KLCC's market valuation remained stable, with its price-to-earning ratio reflecting moderate growth expectations. However, its market-to-book ratio, ranging from 0.91 to 0.96, indicates limited growth potential. UEM Sunrise, meanwhile, shows significant volatility. Its price-to-earning ratio shifted dramatically from negative 7.62 in 2021 to 47.93 in 2023, reflecting renewed investors' confidence. Similarly, the market book ratio improved from 0.24 to 0.59, signaling a more optimistic market perception for its asset. Based on this financial performance evaluation, we can see that KLCC demonstrated financial stability, strong profitability, and operational efficiency, but faced challenges with liquidity in 2023. It remains an attractive option for conservative investors seeking stability. On the other hand, UEM Sunrise showed remarkable financial recovery and growth potential, making it appealing to risk-tolerant investors. However, it must be addressed that inefficiencies in receivable and inventory management to sustain its momentum. By addressing their respective challenges, both companies are poised for long-term success and a greater value creation for their stakeholders. That's all from me. I'm going to pass it to the next person. Thank you.
Hello, my name is Ego Bright. I'm from FOM. I'm here to present the part 4 of our Principles of Finance group assignment, which is investment, analysis, and recommendation. So the first one is price earnings ratio. So looking at the comparison, the price earning for KLCCP has steadily reflected a positive pattern, generally representing a healthy growing company, while the percentage change trajectory shown for UEM Sunshine is volatile, from a negative price earnings in 2021 to an extreme high in 2023, representing increased investor confidence during the company's post-loss growth.
Looking at the comparison between the KLCCP 2021 to 2023 and UEMS 2021 to 2023 price sales ratio, the price sales ratio of the KLCCP was relatively stable and higher in the year 2023, which means that the investors are very confident about its future sales. UEMS recorded a high volatile price sales ratio, reflecting changing investor sentiments from optimism in 2021 to pessimism in 2022, and again to optimism in 2023. Slide 3, looking at the comparison of the market to book ratio between the two companies. KLCCP has an MB ratio closer to 1, indicating a more balanced market view on the company's assets, while UEMS, however, saw a significant shift from a low market to book ratio in 2021 and in 2022 to a stronger rebound in 2023, signaling improved market perception. So here, looking at the earnings before interest tax, this indicates that KLCCP relatively lower EBITDA ratio reflects a more cautious market view, especially considering its relatively high enterprise value. In contrast, UEMS EBITDA ratio helps determine whether investors are paying too much for its earning potential. Looking at the KLCCP investment recommendation, given the steady financial performance of KLCCP and the upbeat investor sentiment witnessed through its PE and PS ratio, this could well be a hold for any existing investor in this stock. In light of the generally relatively high PE ratio, this may indicate some overvaluation and a reason to wait for any price correction prior to entry. Justification: with its continued growth and stability, KSCCP is a good investment for those looking for moderate growth, especially with the possibility of dividend payouts. However, caution should be exercised due to the high PE ratio, which indicates that the stock might be overpriced in the short run. So looking at the UEM Sunrise Behan investment recommendation, UEM Health Sunshine is showing a very strong rebound with an excellent improvement in its PE and PS and MB from 2021 to 2023. The increase in the price earning ratio to 48 and the rise in the PS ratio to 3.08 show that investors are optimistic about the future growth. Despite these positive indications, it will be better to monitor future earnings and profitability. Then the justification: the dramatic recovery in UEMS suggests potential for significant growth, especially if the positive trends continue. This could be a good sign for buying in search of growth, but remember that the high PE ratio might suggest overvaluation. Investors should follow the company's quarterly results and market conditions. Thank you, and I'll pass it to my next colleague. Thank you.
Hello, my name is Rochelle Abowe, and I will be doing the conclusion part of our finance assignment. So let's get started. So basically, we have the KLCCP financial performance. We have the strong profit growth first. Profit margins increased steadily from 2021 at 19.97 to 2023. Throughout the years from 2023, standing at 27.31%. That means it did a very good amount of financial growth. Efficient asset utilization. This basically means that it used its facilities and products very well. So it had a return on assets, which is known as ROA, improved from 2021, starting at a 5.56%, then ending in 2023 at an 11.02%. Then we have positive investor sentiment. This includes the stable P/E ratio around 15.47 in 2023, reflecting confidence in the future earnings. Next, we have the UEM Sunrise financial recovery. So starting with significant turnaround from a net loss in 2021, standing at a negative 0.791% in profit margin, it's changed to a profitability in 2023 from 2021 from negative 19.91% to 6.42% in profit margin. Then we have market valuation improvement. The MB ratio rose sustainably from a 0.24 in 2021 to a 0.59 in 2023, which means it grew over time, which means they probably improved on what they were doing to increase their market valuation. Then we have investor confidence. It had a sharp increase in PE ratio in 2021, starting out from a negative 7.62 in the negative format, and then ended up in 2023 with a 47.93, which means that it had a very large increase within the 3-year ratio that it was continuing in. Now, in my personal opinion, in terms of investment recommendations for KLCCP, I would advise to hold and then buy. This will mean basically the company has a consistent growth and a strong foundation or strong fundamentals. However, you must monitor for potential overvaluation. Basically, you just need to be careful when you hold it and when you buy it. From the next one, UEM Sunrise, the recommendation I personally choose is to buy. For reasons, it has a high growth potential supported by a strong financial recovery, which means, yes, it might fall, but it always gets back up, and improved market sentiments. The best you can do is to monitor the future earnings for sustainability. Basically, just keep watch, like I've said in the previous company. Thank you very much for listening and giving me your time, and just thank you for listening. This has been Rochelle, and thank you very much.